Hello traders, Gary Wagner here. It is approximately 1 p.m. in Honolulu. The markets have closed for the day. It is Friday, the 9th day of December, and this is the daily report for gold and silver, our weekend review. In today's trading, we had modest gains, very modest gains in the precious metals markets across the board. We had gold close up $5.60 at 1711.40, and that would be the ask price. Bid price 1710.85, as you see on your screen. We had silver close up about 51 cents higher, closing at 32.17.5 and 32.33. Bid ask spread up 57 cents, 1.80% higher, and about 1/3% higher on gold. All eyes were on Europe, as there was a summit meeting held in Brussels, which began the other day. The outcome of that was an agreement with 26 of the 27 European Union nations, in which they agreed to have tighter fiscal unity. They also agreed in principle to give up some sovereignty. And the most important part of the summit meeting, in my opinion, is the attempt to put some teeth into these new rewrites. And the teeth really is what will happen if countries do not meet the deficit reduction targets, or they don't keep their budget deficits to a specific percentage of their gross domestic product. And of course, they're going to be penalized. But what they're going to be penalized with, in other words, this is going to be something so soft that the countries ignore it and would rather pay a fine, or will it be something with enough teeth to actually make them hold to it? That is the devil. The devil is in the details, and of course that still needs to be worked out. Another one of the outcomes or highlights of the meeting is an announcement that there will be an additional 200 billion euros contributed to the permanent bailout fund, 150 billion euros from the EU countries and 50 billion euros from other European countries not in the EU. That can be interpreted in a number of different ways. Of course, it came out to be a bullish sentiment when we look at the equities markets. Here is our Standard & Poor's 500. You can see this daily rise here, and that really caps off a pretty strong week that we had last week, that really strong 200-day sell-off the other day, and you can see we've gotten back much of that ground on today's trading session. When we look at the dollar index, what I find most interesting is the way the dollar index closed. We're looking at the March contract. This is a weekly chart, and here's what I'm finding interesting, and that is you got this doji. In other words, the market opened Monday at the same place it closed on Friday, with the upper and lower wicks being the high and the low of the week. Dojis can indicate reversals or pivot points. They typically happen during exchanges of power, when the bulls relinquish power and give it to the bears, or vice versa. You can see it in many instances, but you can also see it as a market simply consolidates before a move. So, for example, when we take a look at the dollar index, you can see a whole series of dojis here as this market came down, and then it clips up, but that's to be short-lived as it moves down. You have a series of dojis here, or smaller bodied candles, before this clip up, dojis here before this move down. But as you can see, you also get them in the middle, so you cannot really weigh a single decision just based on dojis, because many times you get that right before the continuation of a big move, and it's not necessarily a reversal. But it is an indication, always, of consolidation in the market, and it's a point in time in which neither the bulls nor the bears have absolute power, because if the bulls had power, you would see a green candle. You'd see the market close higher than the open. Same thing with the bears. You would see the market close lower than the open. You'd get the red candle. So when you get these dojis, really what it is saying is that neither the bulls nor the bears are able to control the market absolutely. Traders, we are looking at a weekly chart This is of the cash gold market, and it is in Heikin Ashi format, meaning a Japanese average chart. One thing that we have been talking about all week, and I think that you can really see it clearly illustrated when we take a look at it in a Heikin Ashi format, and that is, we talked about the fact that we have a really strong possibility that we have a basic pennant formation or a triangle formation forming in the market. Simply put, you get this type of formation when you get the market trading with a series of lower highs and higher lows. In other words, there's a compression within the dynamics and the range of the market. The philosophy, of course, is that as it gets to the apex of the market, you will have a release of energy. That release is sizable, and you get a sizable breakout. You can really see we've got our long-term support line, our support channel here, our resistance trend line here, and they are both coming together. As they come together, that energy builds. In terms of what we saw this week on the Heikin Ashi, you can see when we're in really defined uptrends, you get these series of green candles, you get an absence of these lower wicks or tails. When you have a defined downtrend in the market, you get the reciprocal. You get an absence of these upper tails and large body sizes. So it's quite clear that we have had this downtrend, we have had this uptrend, but right now, as you can see, we're back into alternating candles. So we are getting, I believe, close to the apex, and we are also consolidating in such a way that this market is poised for a breakout itself. One of the other things that's very interesting about the Heikin Ashi chart is that, as you can see, this week was a down week, but when you compare it to the prior week, that is how we got that green candle in the Heikin Ashi. You do see that the market actually did close lower on the week itself. Now, of course, silver also was an interesting day. It had a very nice showing, actually, as I said, up almost 2% on the day, 1.80. You have it as this green candle here. But once again, I have to acknowledge the fact that on a tentative basis, 31.90, 31.55. That's this line here and this line here. These are the two critical points in terms of holding and finding support. You can see that it absolutely did find support down at 31.50. It actually closed above 32. Nice showing. Resistance right now absolutely sitting at $33 per ounce, $32.90 to be exact, and that's basis the cash market. We really need to see, in my opinion, silver break out of this defined range that it's been in, and I'm only looking really at the body sizes, not so much at the tail, but you can see it has been in this really defined range for the better part of November and going into this first week of December. So traders, what am I looking at, and what are our possibilities for next week? Well, I think that it's quite interesting that we had a massive accumulation of buying going on in the gold market. In fact, and this is according to Bloomberg, gold traders are more bullish as investors buy metal at the fastest pace in a year to protect their wealth from Europe's escalating debt crisis. 18 of the 26 surveyed by Bloomberg expect the metal to advance next week, the highest proportion since November 11th. Traders, there has been this slow but steady accumulation of gold going on. One. Secondly, central banks for the first time in a long time are actually now buying gold. And what I find interesting is as this market consolidates and it has come off of the highs that we saw at 1900, there can be no doubt when we look at this on a longer term basis that we are poised, I believe, for some sort of a major breakout, and that breakout should occur when this pennant formation actually hits the apex. I believe that that might actually be possible before the end of the year. We will just have to see. but the marketplace itself has broken out in many occasions, and it was precipitated by consolidations, corrections, and then huge moves up, as you can see right in here. This top that we had here, we had that correction here. This is not something that has not happened before, but the range is more dynamic than we have witnessed. Do I believe that gold still has the opportunity to go back to its recent highs and maybe even make new highs? Traders, I do believe that's still within the realm of possibilities. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Monday for another daily review and update. Bye-bye.